Marylanders, if you're thinking about retiring, owning a second home, or just owning an investment property, well, we're gonna go over today exactly how you can do that in a small beach town like Jensen Beach here in Florida. So if you're thinking about retiring from Maryland and either moving out of state to Florida, maybe getting a second home in Florida, or even just getting an investment property, that's what we're going to go over today. And I'm here with our local lender, Adam DeSantis, who in fact actually moved from Maryland down here to Florida. So we're here at Jan's place in Jensen Beach, and we just want to go over exactly what it takes to make one of these dreams that you have a reality.
That's right, Mike. Here are the questions we get all the time. How much money do I need? How do I qualify? And what can I qualify for? So living in Florida and working down here, obviously a large portion of our clientele are those people looking to invest or have that second home, or even pack it all up and move down here, whether you're retiring or just transitioning your life to Florida. So we definitely are equipped to help and can answer any of those questions.
The good news is that you've actually done this process. So you actually have a leg up on other people and actually know the nitty gritty outside just the numbers.
Oh yeah. I mean, been there, done that. Packed up the Penske truck 2 days after Christmas, drove down here, haven't looked back.
Yeah, it's super nice down here, so I can understand why people want to move down here. So the biggest question is, like how does somebody even get started into thinking, well, they've already got started, right? They want to make a move here, whether it's either now or they're making that 5-year plan to do so. How much money does it take to even get started with even thinking about this?
So in order to get financing for a second home or investment property, you're most likely looking at 20%. If you want to get really aggressive, you can probably get down to 15%. So it's going to be dependent upon the price of the house you're looking or what you qualify for, that 15 and 20%.
Sure. And how about somebody that, or maybe a husband-wife scenario where a lot of their money is tied up in their home and they don't have necessarily the funds available at this very, these hard funds available at this very moment to, put that money down?
Yeah, so if you're talking about a family who's looking to move and buy their next primary where they're gonna live, we have outlets available to us that will help you use the equity in your home before selling. So they'll front you that money so you can go and put it down on a new home. And then on the back end, when we're qualifying you for the loan, we're not counting your departing residence against you. Again, we have these outlets available to us that are A, they're gonna front you the money, they're gonna float you the money, and B, they also will purchase the home from you should it not sell on the open market in a predetermined amount of time. So you have a guaranteed offer to buy your house and you have that liquidation of the equity.
One of the best parts about that is people always get hung up on, like, I don't want to move a bunch of times just to get to my final spot, right? So using a program like that allows you to find the home that you want, right? Down here in Florida, let's say, and then have the time necessary to sell your house on the open market so you're getting top value for it and facilitating one move. So that you already have the new house and that your current primary house is being sold a month or two after, you can facilitate that move from that place down to Florida. And it just makes the process that much easier and that's much more seamless.
The programs are becoming more and more popular, the buy before you sell programs. Right. These companies are popping up, but we do have it in-house where we have a partner that, again, they will give you a predetermined guaranteed purchase price.
Sure.
Usually it's like 70% of fair market value because there's risk involved on their end too. So they're guaranteeing this purchase price. Now here's the thing, you have plenty of time, for, in some cases, up to 6 months that you can go sell your home on the open market. These entities, they don't want to buy your house.
Right.
They want to collect a little bit of interest on the upfront money, and they're not in the business of owning homes and buying them and selling them. They want you to get it sold. So you have the opportunity to get a guaranteed purchase price, which allows me to eliminate that debt from your qualifying on your new home. They're funding you your equity before you sell. Of course, you're gonna have to pay that back once you do sell.
Right.
But it's a really good deal. It allows you to pack all of your home up, get out of there, get into your new home, you're in Florida while you're selling your Maryland home, and you're not rushing out of the house whenever there's a showing. You're not worried about living out of a trailer because you're waiting on your home to sell and it falls through or whatever. So it's a very popular program, and it is getting more and more popular. So you'll hear more about it if this is the first time hearing about it.
And that actually gives us the ability to do any repairs needed too. So if the home needs any work, it gives us plenty of time to do the necessary repairs so that we are getting that top value for you. All right, number two is, all right, I want to stay living in Maryland, but I want the ability to have a second home down here in Florida, just so I can have two places.
Yeah, so that's going to be heavily dependent upon your income. So you have to be able to carry. If you're not going to use it as an investment property, it's going to be a straight second home. You're going to have the income to qualify for both. Qualifying for a second home is going to be all dependent upon if you can carry two payments, and you're going to have typically 15 to 20% down.
Thinking about relocating to Baltimore? Well, I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research, and I've linked it all down below.
From top employers to best hospitals and a boatload of other things, all the stuff you'll need to know before making the move to in and around Baltimore. The best part, this guide is entirely free. Just click the link in the description at the top pinned comment. Hope this helps.
So typically, when you're wanting to, go through this process, you're either in a position to not only carry two mortgages per se, but you own your own. You've lived in your current home for 30 years and you own it outright. So now you're only having one mortgage.
Right, and if that's the case, the only housing debt that we're hitting you for when qualifying for the new one are the taxes and insurance on your primary residence. I mean, second home's great. It's something that maybe you and a friend, or you and your brother, or you and your parents, or there could be multiple borrowers on the second home. Maybe it's a family shared second home, which may be easier, help you with the upfront money and qualifying.
Right. So maybe if you've lived in your home, your kids are grown, they're in their 30s, they're in their 40s, what have you, and you still want to be up near the grandkids and live down here, the snowbird effect, you have the ability to all bundle it all together, because theoretically you would think that your 30 to 40 somethings are still working, or at least have the money available to help, facilitate, that down payment.
So you bring up a great point. And you could even finance a second home purchase by mortgaging your primary residence. So if you're in a scenario where you owe very little, maybe you live in a place where you've seen exponential growth in your value, so you have equity in that property, and you don't necessarily want to put 15, 20% down, you could potentially finance a purchase by mortgaging your primary residence, which is going to give you primary residence rates and term. So let's say, Goldilocks scenario, you own your home free and clear and it's worth $1 million, and you're looking to buy a $300,000 second home in Florida. Well, you could be a cash buyer in Florida. You just need to get the money out of your equity in your primary residence. You can do that through first mortgage cash out refinance. You could do it through a home equity loan. You could do it through a home equity line. There's a lot of different ways you can liquidate your asset or your first mortgage. Keep those, for lack of a better term, like those nice, warm and fuzzy terms of a first mortgage.
Right.
And you could actually fund your purchase of your Florida home, essentially being a cash buyer down here.
So if you want to know exactly how much equity is in your home, make sure you comment equity in the comments below, or send a text to the number on the screen, and we'll be sure to give you a report of how much exactly you have with equity in your home.
Hey guys, it's Kelly. I'm here with Mike as well. And as much as I love making these videos, there's one thing I love even more, and that's helping families and people from all across the country make a move here to Baltimore. I moved here about 20 years ago and I've never looked back. I love helping countless families make the move as well. So whether you're coming out next week, next month, or even next year, don't hesitate to reach out. My contact information is right here on the screen, and I've linked the description in case you missed the on-screen pop-up. Look forward to helping you and your family make the move to Baltimore.
So now the fun part. What if you don't have any income, you are retired, and you don't have any money coming in outside of the $1,500 in Social Security, give or take?
Yeah, so I deal with that type of client more than I would have ever expected, having moved to Florida. It's a large portion of my business. And it's actually really easy. A lot of these people are in their upper 60s, sometimes even older, and they've accumulated wealth. They have assets. So we do what's called asset depletion, where we take your net amount of assets that you have, whether it's in stocks, IRAs, pensions, just simple savings accounts. We take that total amount and we either divide it by the term of the loan or we divide it by 36 months. That way we pull income straight out of your assets. So if you you have $1 million in a Roth IRA or in a mutual fund, we can use that number and then divide it by one of those 36 months or the term of the loan. Literally take that solution to that math problem and plug it in as income into your loan application. Most of the time, that coupled with Social Security or a small pension can really get people there. It really does. I mean, I just did one last week and the people actually bought in this town, no lie, in Jensen Beach. So it couldn't be more practical than that.
All right, now with that, what if I want to be a real estate investor or own an Airbnb down here, which that's where I'm staying right now? How can somebody facilitate, a loan to qualify for something like that?
There's a bunch of different loan programs out there, but it's really only worth talking about one, and that's it's a cash flow investment loan. In the industry, it's referred to as a DSCR. People have probably thrown that around. All that it is it's qualifying the property based on the cash flow.
Sure.
So it doesn't matter your current debt, it doesn't matter your current income, it doesn't matter if you have experience as a landlord. We have programs for first timers. It's going to be minimum 15% down. Looking for, if you're the higher the down payment, the better the interest rate. We're talking about interest rates probably quarter, half of a point higher than a typical conforming rate. But qualifying is great. We pull your credit. If you have a qualifying credit score, we remove all the debt from the credit report and we just qualify that cash flow. The way that we find the cash flow on the property is
probably the most important question.
Yeah, so it's the exact same way that you derive the value of a home, an appraisal. So an appraiser goes out to the house, and all we do is we order an additional report, and that same appraiser does the rental report. It's called a rent schedule. Just like they're finding 3, 5, 6 comparable sales, they'll find the same number of comparable rental units. So 3-bedroom, 2-bath, 1,500 square foot condo in this town. They'll find a couple of rentals that are already on the market and they'll, just average out the likely rent. If that number that you're likely to get from rent is equal to or greater than your mortgage payment, done. Simple as that.
You're a certified investor, just like that.
You're a real estate bro. Cash in your crypto for some real estate.
Love it. So if you are looking to own something like that or start an Airbnb here in Florida or anywhere else, be sure to type in Airbnb into the comments or to the number on the screen. So if you're retiring and you're looking to move down here to Florida, have a second home, have an investment property, have an Airbnb, be sure to like and subscribe. I'm Mike Mislinski for Kelly Shuett. This is Adam DeSantis. We'll catch you on the next video.